Hi. So on Friday we saw a massive fall in the global crude oil prices. So the chatter in the market is being that due to recession fears in US and in the developed world, the oil prices are crashing. Now all these words, keywords, recession and all that are stock market keywords. So on the real economic front, there is nothing recessionary about it. Demand remains extremely strong. Even in US, there is a shortage of refined fuels in US, so that clearly shows demand remains extremely strong. Also, the demand remains extremely strong across the globe from upcoming countries like India and China. So, the primary reason this crude oil actually went up to the moon was the disastrous policies of the current president Joe Biden, who took handover of the crude oil price at $30 from President Trump. And during his tenure, President Biden's tenure, the oil price went up from $30 to $90 by September October 2021. So that's three times the oil price went up during the tenure of President Joe Biden because of his anti fossil fuel decisions and stance. And Vladimir Putin and Ukraine war came in much later, and then they took the oil price from $90 to $120. Now, let's focus on the fall in the oil price, and it was pretty massive. So the reason for the fall in oil price advocated everywhere is the recession worries and the strength in dollar. So the dollar strength was explained in the previous video. Now the main thing here is this fall going to sustain? So what we think is, yes, it is going to sustain and the oil price will fall much more from here. So the most important thing here is this Venezuelan oil. So Venezuela has the largest oil deposits in the world, and number 2 is Saudi Arabia, and then number 3 are Iran, Iraq and etc. So there is lot of oil in the world, but because of geopolitics and some climate change scam and scandalous talks and funding going towards this climate change and green economy, so all nonsense. This is actually leading to speculation in the oil price trading market. So oil price went up on the speculation that in future there won't be any funding available for new oil exploration projects, new refining projects, new pipeline projects. But as of today, there is a lot of oil in the world. There is a lot of oil to be tapped also. So there is no shortage of oil in the world. The oil prices went up because of the speculation that access to oil and the funding required to access the oil, which is in multiple billions of dollars, will get constrained because of these climate change and green economy kind of scams. So stock market is extremely resilient. Historically, we have observed since more than 100 years that such chatter comes and goes, and oil prices and oil consumption is here to stay till the human civilization is in existence. So the primary reason for fall in oil price, according to me, are two. Number one is this Venezuelan oil cargo going to Europe. So around 2 million barrels of oil per day will start flowing in from Venezuela. So that will kind of ease a lot of oil supply. And most important thing is, during the COVID times, the oil prices, the oil rigs count actually collapsed. So there is a organization in US, Baker Hughes, so that actually documents the oil rigs which are drilling oil as of date. So with the fall in demand and global scenario on the economic front due to COVID, the oil rig count also collapsed and gradually it started to recover. You can see it from this chart. This is the oil rig chart. So now the oil rigs have gone up pretty significantly. So this is the data as of 10th of June. So oil rigs have gone up significantly. You can also call it as pressure from the Biden administration on the oil companies. So Biden has been after the oil companies consistently that they are not increasing oil production and pocketing a lot of money, that is windfall profit from the oil sales. So the oil production cost remains stagnant, but because of the international price in crude oil, the sales consideration what these companies get from selling crude oil is manifold or multiplies based on the crude oil price in the international market. So this leads to windfall profits for these companies, and also it is clearly to be seen that the stocks of Exxon Mobil and Chevron, they are at multi-year, multi-decade high. So it seems that these companies are bugging under the pressure from the Biden administration, and also Venezuelan oil supply is coming up. So this is actually a defining defining moment for the oil prices, which are at multi-year highs. So the supply of Venezuelan oil will certainly will boost the oil supplies globally. Also, there has been a lot of chatter that Europe can actually force a ceasefire in Ukraine. So it may not mean any kind of victory to Russia, because that would be kind of an anti-NATO or anti-American stance, which will lead to European Union coming bare in the open. That is a European version of NATO or anti-American NATO. So they won't go to that extent, but at least a ceasefire will be forced out. And it has been widely acknowledged, although pretty late, that Ukraine only forced this war, as because Ukraine was part of the Soviet Russia, and in the Donbas region there are a lot of Russians living there. So Ukraine actually broke the deal with Russia of not giving a autonomy to the Donbas region as part of their Minsk agreements. So similar thing was observed in India Sri Lanka case, where a lot of Tamils were part of Sri Lanka, and once the British left, Sri Lanka became a separate country compared to India, but a lot of Tamilians who comprised a sizable percentage of population in Sri Lanka, were not given autonomy to their majority states. They are not given representation in the government, and that led to a lot of civil wars and LTT and other activities. So similar thing has been observed in the Ukraine's Donbas region or the Russian ethnicity majority region. So gradually all of this is being acknowledged in Europe, that Ukraine only forced Russia to act in a certain way. So whatever gone bys are gone bys, or whatever is done. So let's just do a ceasefire and kind of move on from here. So we also, this is our premium group for stock market trading. So we have taken a very good position in Nifty call options and ICICI also. Also we had given a put option trade on ONGC on 10th of June, 160 put. So from 2.5 it has gone up to 18. So almost 7 to 8 times. So this is how you can participate in our journey of stock market trading by joining this Telegram group. So on the concluding front, what I'll say is this oil price fall kind of looks pretty well supported by the real fundamental developments of the rig count, oil rig count in United States. Don't forget, United States even now is the largest producer of oil in the world. The kind of consumption these states and the overall USA has, it still needs to import oil. But as of now, it is the largest producer of oil in the world. So the number of oil rigs in the ocean and in the sands and in shale gas basins and shale oil basins still remains very important. So global oil prices, global oil supply, all these parameters are very important. But United States being the largest producer of oil in the world, they have to kind of look within first. So on that front, a sharp increase in oil rig count has been observed. The Baker Hughes oil rig count plus the Venezuelan oil supply as promised by the or as encouraged by the Biden administration is kind of coming into the market. Also in previous video we clearly mentioned that there has been a selling exhaustion observed in Nifty and in the Indian market. So we can see a pretty good relief rally on the Nifty front. And domestically also things are in pretty good shape. So the oil prices in United States have kind of almost doubled from pre-pandemic to current level, and in India they are up around 30 to 35%, despite India being a massive importer, third largest importer, and India producing very less oil of its current consumption. Almost 80-85% of the oil consumption of India is fed by the imports. So India is also diversifying. So number one oil supplier to India is Iraq, and number two were the other Gulf nations. Now India is kind of diversifying to Russian crude. Although Russian crude, the Ural crude, because it is named after those Ural mountains. So the Ural crude is considered pretty heavy. So it is very difficult to refine such heavy crude. But with advent of technology and lot of investment in the refining industry in India, they have been able to successfully refined this heavy crude. Although the second largest private oil refiner, that is SR Oil, was acquired by Rosneft. So that is a Russian company. So we have a natural partner here on the refining front, owned by the Russian government company Rosneft. So Russian oil will flow into India at much faster pace. Also, non-shipping route from Russia via the Caspian Sea and then via Iran, Bandar Abbas port, and then directly to India. So it starts from trains in St. Petersburg, Russia, to the Caspian Sea. Then from Caspian Sea it navigates through the waters to Iran, and then again via train it comes to the Bandar Abbas port, and from there it comes to Bombay Nhava Sheva port. So even this new trade route has been developed, and one just this month, around a week back, a test shipment was also passed through this new route. So the new kind of economy trade setup is emerging here, which is non-dependent on these Western influence, because everywhere from banking, payments, shipping, these Western companies hold their influence. Like the shipping is entirely, majorly owned by the Greeks. So here, the Russia, Iran, India, there is a new trade corridor being set up. Also, just today there was an update that around 4% increase in domestic oil production has been observed in India. Even in Dahej, we have Adani and Welspun working on a oil exploration field. So things are moving on a gradual pace, and things are looking good on the Indian front. And as I said, there's a selling exhaustion being observed, and if the oil prices continue to correct, which we expect, because they are backed by the fundamental news, which will pull these oil prices down further going ahead. So we do expect pretty good rest of the June month on the stock market front, based on the fall in oil prices. Thank you very much.